funsupermart.com.
Which part of the Asian market does Affin Hwang prefer? And what are the best opportunity today?
As far as the Asian markets is concerned, I think we'd like to look at Asian markets in terms of the themes that they offer, given the current environment where, over the next few days and few weeks, there's a high level of policy uncertainty with Trump taking on the presidency in the United States. So as far as we're concerned, in terms of how we're investing in Asia, it's really investing in a diversified list of themes and sectors. Right. So in terms of the areas that we like, the first theme that we like and we've liked for a long time in Asia is the infrastructure theme. Right. A lot of countries around the region are spending money on infrastructure, and that would benefit the companies' profits and earnings growth. The other segment that we like is also the domestic theme. There are countries out there which are less exposed to the external environment, countries such as India, for example, countries such as Indonesia, Philippines, and to a certain extent Thailand, where there's a lot of fiscal stimulus, incentives being given, where demographics or urbanization stories are still ongoing, and therefore domestic consumption should continue to pick up. And there are these segments of the population in countries such as Thailand, Indonesia, for example, that also benefit from stronger commodities prices. So domestic consumption within those countries should benefit. The other area that we like in Asia as a theme is some of the banks and insurance companies, because they benefit from rising interest rates. So if we believe that interest rates are going to gradually rise, given what's happening in the US, then these are the sorts of businesses whose earnings should improve as interest rates rise. So as opposed to specific countries, it's really more about the sectors and the themes that we like. And we can find these various themes and sectors across the countries in Asia.
With the Fed expected to have a faster than expected rate hike trajectory, do you expect similar rate decision to be done by the Asian central banks?
I think first of all, as far as the Federal Reserve is concerned, we all know they've indicated that they'll look to hike rates another 3 times this year. But you and I know that we have been through this before. I think in 2015, at the end of 2015, they also talked about hiking rates 4 times in 2016, and they only did once. But assuming they do hike rates 3 times, my sense is that, at least for now, the Asian central banks will not be in a rush to raise rates. Given the fact that Asian central banks, unlike the US Federal Reserve, did not embark on unconventional monetary policy where they kept rates low and implemented quantitative easing, Asian central banks did none of that. And we have a very, what I call a normal yield curve, which is why I don't think that Asian central banks will be in a rush to hike rates.
What will be the impact on their respective equity markets?
It's going to be a period where it's important to be diversified, because to take an extreme view on markets, to be extremely positioned in one asset class or one geography or one currency, I think is going to be a very risky move to take. It's going to be the same as what we've seen over the past few years, where things appear to be fairly stable, secure, but there's all these potential flashpoints in terms of policy risk. So I would advocate that for investors to have a very broadly diversified list of portfolios or funds, giving you exposure to themes like dividends, to growth, reflation, and not to forget, I think, not to avoid investing in bonds or fixed income type instruments. And I think that's a key, given that we really don't know what kind of policies the US would implement once the new president comes on board. So far, we've heard about what he said on his campaign trail. Once he takes office, there's that element of uncertainty there, right?
What will be the headwinds that investors should look out for with regards to their Asian investment?
There are a couple. Of course, the first one is if Trump becomes extreme in the policies that he implements or the things that he says. So if he actually goes all out to impose tariffs, to implement trade barriers, to be anti-globalization. In general, Asia being part of the supply chain and being typically an export-oriented type economic region, Asian economies could suffer. Okay? That's the first thing. Second is if inflationary pressures in the US picks up more strongly than expected, then the risk of the Federal Reserve actually hiking rates more quickly and more sharply tends to destabilize flows, and you would typically see, at least initially, flows flowing out of emerging markets, including Asia. So to us, those are the two key risks. And if you look at it all together, it's really a function of keeping an eye on the US dollar and US treasuries or US interest rates, because those are the two key things that would determine whether flows continue to flow out of Asia and emerging markets or stabilizes and start to come back in.
Are there any exciting opportunities within the Asian bond space?
I think as far as investing in Asian bond space, I'll bring you back again to my answer earlier. A lot of it has to do with how US treasuries and US interest rates move over the next several quarters and the strength of the US dollar, the movement of the US dollar. So as far as investing in bonds is concerned, or investing in a bond fund is concerned, it is very important to invest in a bond fund that is actively managed in terms of the duration, right? So you want to select a bond fund where the fund manager has a view of where interest rates are going to be, where currencies are going to be, and manage the portfolio duration and the country and currency exposure accordingly. I think that's very important. But after having said that, I think that while there are concerns or fears that interest rates could rise very sharply, my belief is that while it may continue to rise a little bit more, it will not rise too high, given the fact that we live in a world where the general population is aging and where debt levels are high. So interest rates cannot rise too much, because the higher it goes, the more it slows down the global economy. So it acts as a natural balance to prevent rates from rising too fast and too high.